Welcome, ladies and gentlemen, to Minds and Money London virtual here with Commodity TV. And for the first time, we have Jamie Boyton, the chairman of Capital Limited, out of Hong Kong here with us. Hey, good day, and how are you, Jamie?
I'm very well. Thank you very much for having me.
Yeah, great taking the time, and a really interesting company, I must say. I just found out a little bit more in our pre-talking. So you are a service provider, drilling, you are analytical services, you have a lot of investments, and of course you are making money. So please give us a short overview on the company first.
Sure. We are a service provider to exploration and mining companies with a focus on the African continent. We started life as a drilling company doing exploration drilling services, and over time that service offering has evolved. So now we offer a full range of drilling, exploration, delineation, production drilling, which is grade control and blast hole drilling, as well as underground drilling. And then beyond the drilling business, we then expanded our service offering even further. So in 2017, we entered the laboratory business, so we do geochemical analysis. And in 2019, we added earth moving services.
Okay. Wow.
So we're quite unique in that we're the largest drilling company in Africa, but we are quite unique in that we offer a full range of services from exploration all the way to delivery of the ore to the mill.
Okay, super. And I saw also in your presentation, you did already approximately $100 million in revenues in the first half this year already. And you are planning, or let's say in your outlook, you said approximately $210 million in revenues this year. So you are also highly profitable, and you are paying a dividend. That is beautiful.
Well, we're a little bit unique, actually. We've been paying a dividend since 2014, and we've always maintained a very conservatively geared balance sheet. And we're very proud of the fact that we have a very high quality portfolio of long-term contracts, which enables us to really have a very high degree of visibility on our forward revenue, and therefore obviously giving us the capacity and the ability to manage our balance sheet and pay dividends. Look, over the course of the year, we actually started the year with revenue guidance of $185 to $195 million. But look, we've had an extremely strong year, as has the sector. And twice this year, we've now upgraded our revenue guidance. The most recent iteration was with the release of the Q3 trading results. They came out on the 13th of October. And in those results, we actually upgraded the guidance. The most recent number is 220 to 225 million. So, look, it's been a very strong year for activity, and most of that upgrade has been driven by stronger than anticipated activity in our drilling operations.
Okay, so the drilling. What is causing still those hefty delays in the labs? Because I hear from a lot of companies I'm interviewing, I hear, wow, turnaround times 60 days, 90 days, 100 days. I mean, is this all Corona driven, or is so much going on in our mining universe, I would call it?
I think it's a bit of both. But I think even if Corona weren't a factor at the moment, the turnaround time certainly would have extended quite materially, because the demand skyrocketed over the latter half of 2020 and 2021. And you're quite right. There's quite common comments about turnaround time, like laboratories reaching up to 6 weeks, 6 to 8 weeks. So it's certainly become a feature. I think both factors have had an influence. But look, our laboratory business, we started, as I said earlier, in 2017. It's going through a rapid growth phase at the moment. And one of the initiatives that we've rolled out this year is a new technology for assaying called Chrysos, which we've just installed one at the Bulyanhulu gold mine in Tanzania. It's quite revolutionary technology. And the long story short, effectively, it's an X-ray technology for assaying. And believe it or not, the turnaround time is about a minute. It can do an assay in a minute. So we're rolling out that technology across Africa and into Canada. And certainly we think that gives us a very unique USP when it comes to turnaround time moving forward.
Okay, super. So who are your typical customers? Can you give us some names of companies, for example, that we get a better idea?
Sure. We've always had a pretty high quality roster of customers, and we started the business in 2005, and our first customer was actually Barrick and Glencore in joint venture. So it's not a bad way to open your book of business back all those years ago. Yeah. Look, the portfolio of customers at the current point in time, Barrick is still a very large customer. We work for them at 3 different operations. AngloGold Ashanti, the Gator Gold Mine, we've been there since 2006. Centamin, Sukari Gold Mine, we've been there since 2005. Kinross's Tasiast Mine in Mauritania, we've been there since 2010. And more recently, we've added the likes of Endeavour to our customer list. So look, we really do we're very proud of our customer list, and we think it reflects the quality of the offering that we're providing to the market.
Yeah, absolutely. You just mentioned Sukari, and I see in your on your presentation Sukari waste mining contracts. So you are also cleaning mine sites?
Waste mining. What we're doing there in 2020, it was about a year ago actually that we announced it. Sukari ran a tender process where they've got 120 million tonne of waste ore to move, which is effectively a stripping exercise to enable them to get to the ore body underneath. So we were awarded that contract late last year. We started moving that earth in February, which was quite a record mobilisation. We mobilised 3 excavators, 17 trucks. We employed about 350 people. So that operation is well and truly underway, and that contract runs for about 4 years. When we were awarded that was actually the largest contract we'd been awarded. It was worth about $250 million over 4 years.
Okay, wow, fantastic. So how do you deal with these days inflation in your long-term contracts? Because I see that you have contracts like between 10 and 16 years even. And how do you deal with that?
Probably the typical duration of a contract across our business is around about 3 years. When we're quoting those numbers as earlier with Gator and Sukari, there's many iterations of those contracts. So they've been renewed every 3 or 4 years. But to answer your question about inflation, any of the long-term contracts have embedded inflation clauses written into the contract. So it's effectively, we can refer to it as a rise and fall contract. So it looks at all your input costs, inflation, labour, consumables, fuel, etc., and it adjusts for movements in your input costs.
Okay, so how do you handle, or how do you do that with your direct investments, which are contributing to the business development? Do you say, okay, guys, we are drilling, but we want to have a stake in the company?
Look, it's a bit of a parallel business that we'd done since 2015, but we really ramped up our efforts in 2019, and what we saw was quite a significant disconnect between the capital markets and what was an improving gold price. I mean, our principal commodity exposure is gold, and gold had found a bottom in 2016 and it was trending in the right direction, but capital markets were still completely closed. So we actually formalised our investment process and established an investment committee, and did a fairly rigorous screening process of the opportunities and made a number of approaches to both juniors and mid-tiers. And we put our balance sheet to work, and in most cases we got contracts commensurate with that. So we ended up with a pretty high quality investment portfolio that's done spectacularly well, particularly this year. We actually had to make a release not that long ago to the market due to the materiality of the performance. And look, we continue to assess opportunities as they come by, but look, it's added another pretty material string to our bow, which we found to be very beneficial, obviously performance-wise and in generating business for ourselves.
Okay, you already referred to your balance sheet. The balance sheet looks really strong, I must say. So how do you finance your business? How is your, let's say, your gross debt composition? How does that work?
Well, we've maintained until late 2020. We're in a net cash position with a revolving credit line with Standard Bank. It was only in late 2020 when we moved into the load and haul contract that we discussed earlier at Sukari, and we did a capital raising in December of last year of 40 million, and then we did some asset-backed financing with the likes of Macquarie Bank, Sandvik, and Epiroc. So we're now sitting in a net debt position, gearing ratio, however, still below 20% debt to equity, so still pretty conservatively geared, and that's not allowing for the investment portfolio as well. Most of the debt, probably about 3/4 of our debt, is asset-backed and amortizes over the course of the Sukari financing. That was a $65 million capital outlay. So the business we've passed the capex hump, shall we say, with respect to all the Sukari capex is at work now, and as a result, the debt is now amortizing down. How do we finance moving forward? The business is back to being cash generative again, and obviously now that we have runs on the board with our earth moving business, the opportunity set with financiers has opened up quite significantly.
Super. Last question, 2022, where do you see your business moving? Where do you see, let's say, growth opportunities, maybe new businesses you want to open up?
2022 will be predominantly more of the same. I mean, our earth moving business and our laboratory business are still quite young. And they're both on quite a trajectory. Particularly the laboratory business has got a lot of momentum behind it at the moment. The earth moving business, we have 2 contracts, and Sukari being the biggest of them, and that's a lot lumpier in nature. Those contracts, if you get one awarded every 6 to 9 months, that's a good result. So where I see growth at the moment is continued demand for drilling. It really is extremely strong in the market. Laboratories, as we've discussed with turnaround time, extremely strong there. And then we're tendering on a number of earth moving opportunities. So to be frank, it'll be a mix of the same sort of business, but the momentum at the moment is well and truly behind us.
Super, perfect. Jamie, thank you very much. It was a great insight into your company. Really like it. And yeah, wish you Merry Christmas and all the best.
Merry Christmas to you, and thank you very much for hosting me.
Thank you. Yeah, ladies and gentlemen, there was Mines and Money London Commodity TV for you with Jamie Boyton, the chairman of Capital Limited. Yeah, largest drilling company in Africa, with the who is who of African miners as clients, and yeah, really making money, paying a dividend. I think it's a great company in the absolutely right business, because service providers are really needed. As you heard, turnaround times in the labs are still way too high and take way too long. And this is one of their growth opportunities also for next year. So I would suggest you check out this company. Thanks for watching us, and bye-bye from Switzerland.